Ladies and gentlemen, if you're waiting for permission to protect your future, here it is. In a world built on debt and promises, the people who win don't cling to paper, hold things that can't be printed. I'm going to give you 7 emergency assets. Study them, accumulate them, and most importantly, build cash flow around them. Gold has always been money. Everything else, your paper dollars, your digital bank balances, even your so-called safe government bonds, is a promise. Promises can be broken, diluted, inflated away, defaulted on. Gold doesn't care who's in office, which central banker is giving a speech, and what new policy is being tested on the economy. It simply sits there, a timeless store of value, accepted across cultures and across centuries. That's why when debt levels are exploding and currencies are being printed faster than productivity is being created, the smart move is to accumulate gold. Not paper contracts, not derivatives, not ETFs that can be gained by Wall Street, but the real thing you can hold in your hand. The point isn't that gold pays you interest or dividends. It doesn't. The point is that it protects your wealth from a rigged system. Look back at every empire, every major financial collapse, every currency reset. Gold always emerges as the measuring stick. When confidence evaporates, when people don't trust politicians or central banks, fall back on what they know to be real. That's the insurance policy. So-called experts on TV will call it a barbarous relic, yet central banks themselves are buying it by the ton. Ask yourself, if gold is outdated, why are the most powerful financial institutions on the planet hoarding it? They understand the game. They create the game. They just don't want you playing it in 2025. The cracks are obvious. Debt ceilings smashed through, interest rates weaponized, and the dollar being questioned more openly on the global stage. These aren't small signals, they're warnings. Gold becomes less about return on investment and more about survival of purchasing power. Imagine the worst case, your paper savings cut in half by inflation, your stock portfolio tracked in a prolonged bear market, your bonds crushed by rising yields. That's when the person with physical gold sleeps better. This is not about panic or fear. It's about discipline. Every month, take a portion of what you earn and quietly convert it into ounces. Don't brag. Don't trade it like a stock. Just build a foundation, because when the next shock hits, and it will, you won't be the one scrambling for answers. You'll already own the answer. Gold has no counterparty risk. That's its superpower. And in a world drowning in debt and paper promises, that superpower is priceless. That silver is the most undervalued, overlooked asset in the world today. People chase stock. They chase real estate at the top. They gamble on the latest tech fed, but they ignore the metal that is both history and a future. Silver isn't just money. It's also an industrial workhorse. It sits in your phone, your computer, your solar panels, your electric car. Every year, demand for silver and technology grows while supply struggles to keep up. Yet the price doesn't reflect its true value. That's the opportunity. That's why I call silver the bargain of a lifetime. Here's the math. Gold trades many times higher than silver, but historically the ratio between them was much tighter. When the world gets stressed, that ratio closes and silver plays catch up in a dramatic way. Imagine holding something today at a fraction of the price of gold, but with far more upside. When the financial system shakes, that's silver. Most people ignore it because it's cheap. That's exactly why you should own it. The herd only respects what's expensive. The contrad respects what's real, underpriced. And unlike gold, silver is disappearing. Think about it. Gold is hoarded. Almost every ounce of our mind still exists somewhere. But silver gets used up. It sits in landfills, soldered into electronics, scattered across industries. New demand eats into already tight supply. That makes silver unique, part monetary asset, part critical industrial metal. When a resource is both money and technology's lifeblood, you want to own it before the crowd wakes up. The beauty is you don't need to be rich to get started. 1 ounce of silver costs less than a dinner out. You can build a real position slowly, quietly, without stretching your budget. Over time, those ounces add up. And when panic finally hits the currency markets and people rush to hard assets, silver won't stay cheap. it will spike, and those who ignored it will look back wishing they had listened. Don't overcomplicate it. Don't wait for permission. Every time you get paid, peel off a little and trade it for silver. Stack it, store it safely, and forget it. Because one day when the promises of paper are breaking down, your pile of silver won't just represent protection. It will represent foresight. It will be proof that you understood the game before the masses caught on. And that's how wealth is built quietly, patiently while everyone else is distracted. Bitcoin is the newest form of money, but the principle behind it is as old as wealth itself. Scarcity. Only 21 million will ever exist, and that number can't be inflated, printed, or manipulated by politicians or central bankers. That's the power. Every other currency in history has been debased, diluted, and destroyed by those in control. Bitcoin removes the middleman and hands sovereignty back to the individual. When you own it, you're not trusting a bank, a government, or a CEO. You're trusting math. Critics call it too volatile. They laugh when it drops and panic when it sources. That volatility is just the market digesting a revolutionary asset. Think about the internet in the early days. Chaoticus, misunderstood, dismissed as a fad. Then it rewired the entire world. Bitcoin is at the same stage. It's not about the daily price action. It's about understanding the system. It disrupts the fiat system. Runs on trust and debt. Bitcoin runs on code, consensus, and transparency. Which one do you think lasts longer? People also say, but it's not backed by anything. That shows a lack of financial education. Bitcoin is backed by the most powerful computer network on Earth, secured by millions of machines solving cryptographic puzzles, and by millions of people who choose it voluntarily every single day. It's decentralized, borderless, and censorship resistant. In a world where governments freeze accounts and banks limit withdrawals, that matters more than ever. The key is not to gamble. Don't treat Bitcoin like a lottery ticket. Buy a little consistently over time. Secure it properly. Learn how to hold your own keys. When you do that, you remove counterparty risk, the same reason you own physical gold and silver instead of paper substitutes. Bitcoin is digital property. It's a savings technology. It's the hedge for a future where fiat currencies lose trust. Here's the reality. Whether you love it or hate it, Bitcoin is not going away. The largest institutions, the wealthiest funds, even countries are now holding it. That's not speculation, that's adoption. And as the supply stays capped while demand rises, the math is simple. The world has never seen an asset with this level of programmed scarcity. When the next crisis hits, you'll see who is paying attention. The ones stacking digital scarcity now will be in position. The ones dismissing it will be left behind. Bitcoin is not about getting rich quick. It's about staying rich permanently in a system designed to make you poor. Real estate is not about buying low and hoping the price goes up. That's gambling. The real power of real estate is cash flow. Honey that comes in every single month. Whether the market is rising or falling, price goes up, price goes down. But if tenants are paying rent, expenses are under control, you get paid. That's what separates an investor from a speculator. An investor looks at the numbers, a speculator stares at charts and hopes. The beauty of cash flowing real estate is that it solves two problems at once. It puts money in your pocket today, and it protects your wealth tomorrow. When inflation eats away at the value of your dollars, rents adjust upward. When markets panic, people still need a roof over their heads. Real estate is not optional in life. Shelter is a necessity. That's why well-chosen properties with positive cash flow can withstand storms that destroy stocks or paper assets. But here's the catch. Not all real estate is good real estate. Buying a house you live in isn't an investment. It's an expense. What matters is whether the asset feeds you or eats you. You want properties that pay for themselves and then some. That requires education, due diligence, and discipline. Look at location, demand drivers, rent to price ratios, financing terms. Don't get emotional. Treat it like business because it is a business. Tenants are your customers. Property managers are your partners. Cash flow is your scoreboard. Leverage is another reason real estate is so powerful. With other assets, you usually pay the full price. With property, the bank lends you money to buy it, and your tenants pay the bank back through rent. Done right, you're controlling a large appreciating asset with a fraction of the cost while generating monthly income. That's the secret the wealthy use again and again. They buy cash flowing assets with other people's money, then let time and inflation work in their favor. The coming years will create huge opportunities. Rising debt, currency weakness, and market volatility will push more people into rentals. Smart investors will be ready with cash, credit, and education to pick up properties when panic sellers run. The key is to be prepared before the window opens, not after. Cash flowing real estate is not about getting rich overnight. It's about building a foundation that pays you in good times and bad. It's the difference between hoping for wealth and owning it. Numbers don't lie. If a property pays you every month, it's an asset. If it takes money from you, it's a liability. Never forget that. A job might pay the bills, but it never set you free. A business, on the other hand, has the power to create income whether you show up or not. That's the difference between trading time for money and building a system that prints cash. The wealthy understand this. They don't rely on one paycheck controlled by someone else. They own businesses or systems that keep generating money even when they're asleep. That's why they get richer during downturns, because their income isn't tied to their hours. It's tied to ownership. The mistake most people make is thinking a business has to be big, flashy, or complicated. It doesn't. A business is simply a system that delves value to others and pays you for it. It could be rental properties managed properly. It could be an online store that runs with automation. It could be a local service that's in constant demand. The point is building systems, not just creating another job for yourself. If you have to work harder and harder just to keep it alive, that's self-employment, not business ownership. The real breakthrough comes when you can step away and the income keeps flowing. Businesses also come with advantages no job will ever give you. Tax benefits, leverage, and scalability all tilt the game in your favor. Employees pay taxes first and live on what's left. Owners earn, invest, spend on the business, and pay taxes last. That structure alone creates a huge wealth gap between those who build businesses and those who only work for them. Add to that the ability to scale. A system can serve 10 people or 10,000 people with the same core process, and you begin to see why true financial freedom lives in ownership. In uncertain times, businesses that solve basic problems thrive. People always need food, housing, transportation, and services. The world doesn't stop consuming. It just changes how it consumes. Owners who adapt quickly can capture entire markets while the rest complain about the economy. That's the hidden gift of a downturn. It clears the field of weak players and rewards those prepared with solid systems. So build or buy a business that throws off cash. Learn the basics of accounting, marketing, and management. Surround yourself with people smarter than you and systems stronger than you. The goal isn't to work harder forever. It's to design something that works harder than you ever could. Because once you own a system that prints cash, you stop living paycheck to paycheck and start living life on your own terms. The smartest investors don't just own the resource, they own the source. It's one thing to buy a barrel of oil or a few ounces of metal. It's another thing entirely to own the wells, the mines, or the companies that pull those resources out of the ground. That's where the real wealth is created. Producers sit at the front. The value chain, when prices of energy or metals rise, their margins expand and their cash flow can explode. While consumers feel the pain of higher costs, producers enjoy the upside of essential demand. Think about energy. No matter what happens in the economy, people flip lights, heat their homes, and drive cars. Technology may evolve, but energy never goes out of style. Whether it's oil, natural gas, or the new wave of renewables, the companies that control production have leverage over everyone else. The world runs on energy and with nothing else functions. That means producers of energy are in a position of strength, especially during times of crisis. The same is true for metals. Gold and silver are real money, but the businesses that mine them are a direct line into future supply, beyond the monetary metals, industrial demand for copper, lithium, and nickel continues to surge because of electric vehicles, batteries, and infrastructure. These are not luxury. They're requirements for the modern world. Owning producers is like owning a toll booth in the future economy. Every transaction, every innovation, every new technology has to pay the toll in the form of resources. This doesn't mean you blindly buy any mining or energy company. Most are poorly managed, overloaded with debt, or wasteful with capital. You want producers with discipline, those who generate real free cash flow, protect their balance sheets, and return capital to shareholders. Just like real estate, numbers don't lie. The right producers thrive when cycles turn and the wrong ones collapse. That's why education and careful selection matter more than hype. In times of currency weakness and debt crisis, essential producers are one of the few ways to stay ahead. You're not betting on trends or speculation. You're investing in the very foundation of civilization. If the lights go out, if supply chains freeze, if currencies falter, energy and metals don't lose value, they become more valuable. That's why the wealthiest families and funds quietly accumulate stakes in producers. They understand that whoever controls essentials doesn't just survive uncertainty. They profit from it. Most people think wealth is only about money in the bank or investments on a statement. They forget the basics, the things that keep you alive when systems break down. Food, water, medicine, fuel, and daily essentials are just as much assets as gold, silver, or real estate when times get tough. In fact, when shelves go empty or supply chains get disrupted, these become the most valuable assets of all. You can't eat a stock certificate. You can't drink a bond coupon. In moments of crisis, it's the essentials that determine whether you're safe, secure, and able to make smart decisions, or whether you're desperate and forced into bad ones. The trap is believing that stores will always be full, trucks will always deliver, and credit cards will always swipe. History says otherwise. Every financial crisis, every war, every natural disaster proves how fragile supply really is. One disruption can ripple through the entire system. And when the system stutters, it's not luxury items people fight for. It's bread, clean water, and fuel. That's why the disciplined few quietly build reserves ahead of time, not out of fear, but out of foresight. Practical reserves don't mean hoarding. They mean building a cushion of security, extra food in your pantry that rotates naturally, water storage or filtration systems that keep your family supplied, backup energy sources, whether it's fuel, generators, or even solar panels, basic medical supplies that let you handle emergencies when the system is stretched thin. These aren't luxuries, they're necessity, and when you have them, you gain freedom. You won't be at the mercy of panic buying or government rationing. You can wait out the storm calmly while others scramble. Here's the hidden value. When your essentials are secured, you're not forced into emotional decisions with your financial asset. People without reserves are quick to sell gold, dump stocks, or burn through savings just to cover food and basics. That desperation destroys wealth. But when your pantry and essentials are covered, you can think clearly and protect your financial strategy. Your reserves become an invisible shield, buying you time and confidence while others are trapped by panic. In the end, practical reserves are not about fear. They are about control. Control over your household, your mindset, and your choices. Real wealth is measured in peace of mind as much as in dollars. Build reserves quietly and consistently, just like you stack metals or acquire cash-flowing assets. Because when the system shakes the family with food and essentials already rich long before the markets recover in 2025, the gap widens between those who own real assets and those who cling to paper promises. Choose which side you're on. Stack real money, build cash flow, own production, and keep your household strong. When the crowd screams, you'll be shopping quietly, confidently, and profitably.